Hello, everyone. Welcome to the Manta Trends webcast. My name is Ivy Lamb, and I'll be your host for today's event, Growth and Taxes, Open a New Location. We're happy to have you with us today, and we hope you'll tweet about today's event using the hashtag MantaTrends. We'd also like to thank Avalara for sponsoring today's event. Before we dive in, I want to cover some important housekeeping items about the event. During the webcast, you should see a slide area, which will allow you to view the webcast. On top of the slide area are 3 tabs: Ask a Question, Attachments, and Rate This. Click on the Ask a Question tab to submit a question at any time during the webcast. We'll do our best to respond during the Q&A at the end of the event. If you're having technical difficulties, please email webinarhelp@manta.com. Now, on to today's topic. Opening a new location can be a smart growth strategy, especially if you're struggling to keep up with demand in your current location or want to expand into a new market. But it requires a significant investment of time and resources. So how do you know if you're truly in a position to manage the risk of opening a second location? Manta has some pointers to help you evaluate your readiness. First, and this might seem basic, but take a hard look at your actual profits. Some business owners jump into opening a new location before the first one is stable enough to sustain itself while the owner's attention is focused on getting the new venture off the ground. Related to that, you also need to evaluate staffing and operations at your current location. Think about what would happen if you weren't there to oversee day-to-day functions. Would everything run smoothly without you? If the answer is no, your business may need more time before you set up a new location. Lastly, if your current location is running smoothly, that's great, but you need to consider how you'll duplicate that success at your new location. Planning out how you'll do this will help you decide if your business model is in fact easily replicable. If you are ready to open a new location, it's important to have a plan in place before you move forward. Manta recommends finding a mentor or other expert to help you with this process. For example, SCORE, a nonprofit association supported by the U.S. Small Business Administration, can connect you with a mentor, and you can find their website linked in our Attachments tab, along with some other resources. But here are a few considerations just to help you get started. The first consideration is, where will your new location be? Will it help your business reach new customers or expand into a new market? Is there existing competition nearby? Do some research to answer these questions before you settle on a specific area or building. Secondly, how will you pay to get your new location off the ground? In most cases, it's best to treat your second location as if it's a separate venture financially. Otherwise, it could destabilize your first location. So you want to look into your different financing options before you move ahead. Thirdly, what positions will you need to hire to staff your new location? Is there a pool of qualified candidates in the area you are looking at? You'll need to figure out the cost and logistics of advertising job openings, interviewing, and training new employees. And last but not least, how will you handle unexpected or hidden costs? Sometimes things just don't go according to plan, and if you anticipate for potential budget overruns, you'll be able to handle the unforeseen costs of the new location without going under. Now, I'd like to introduce our guest expert today, Sam Bedford. At Avalara, Sam helps businesses find solutions to manage sales tax, and he's here today to help us understand some of the sales tax implications of opening a new business location. Thank you so much for joining us today, Sam.
Thanks, Avi, and thanks everybody for joining the webinar. So as Avi mentioned, a great opportunity for businesses like yours to reach new markets and gain a logistical edge in the market is to open up a new location. So when opening up a new location, an important consideration that is often overlooked is your sales tax process. So states and jurisdictions have their own taxability rules, exemptions, tax holidays, filing rules, forms, deadlines, etc. I recommend reaching out to your current CPA or accounting firm and asking if they have experience with sales tax in the states where you are looking to open up a location. Something to keep in mind is that many CPAs and accounting firms do not specialize in sales tax for every state. So ask if they can provide you a recommendation to another accounting professional in the state or even partners like Avalara who have multi-state sales tax expertise. Once you gain an understanding of the sales tax implications associated with your products in a new state, you will need to contact the Department of Revenue or Board of Equalization in that state and find out what the specific guidelines are to get registered as a sales tax remitter. Some states have local level registration in addition to the state level. So understand all levels of exposure prior to opening up your new location, and be sure to give yourself ample time to complete the registration process. From my experience when dealing with registrations, depending on the state, it can take an average of about 4 to 6 weeks for them to finalize your paperwork once you've submitted it. So I recommend allowing around 2 months to get this finalized with the state or each state that you are working with. Avalara's professional services team can help with getting registered, and I'm sure there's many other options out there if you don't have the time yourself, whether that be an accounting professional you currently work with or other multi-state sales tax professionals. So when you add another location, especially if it's in another state, in most cases you will create nexus. So as a recap from our previous webinars, nexus is loosely defined as a sufficient physical presence, which means that you will need to collect and remit sales tax in yet another location. So as your business continues to grow and you add more and more locations or start selling online to customers in many different areas, a process that was good enough before just might not work anymore. It becomes incredibly more difficult and more to manage the more you grow and the more states you're in. So the next thing I'd like to cover are a few steps, a bit of a recap of the previous slide that I think are important to include in your evaluation of adding a new location. So I think it's safe to say or to assume that all of you understand the importance of location and logistics along with the cost of your addressable market in a new location. So I'm going to focus on the steps that are often forgotten in regards to sales tax. So understanding your requirements in a new state can be very overwhelming. So take a deep breath and understand that you can take a strategic approach to sales tax. Again, contacting a tax professional is always the first step in regards to sales tax. Gain an understanding of whether you need to register or not. As I mentioned before, chances are you should register if you are opening up a physical location. Also, identify if your products or services are taxed differently in the new state versus where you're currently collecting and remitting sales tax. Understand any local jurisdictional requirements you may have. Some states that come to mind, Alabama, Louisiana, Colorado, are states that I run across on a regular basis that have local jurisdictional requirements based upon where you're providing services or where your locations are. So understand how the state requires you to file and remit the sales tax once you collect it. Some states have made it easier than others, and some states even require you to break your returns out at the local jurisdictional level. So how much time is it going to take you to stay compliant? Will you need to hire additional employees to manage this compliance? Are there solutions that you can leverage as an outsource for sales tax compliance? And lastly, what are the overall costs of sales tax compliance for your business? After considering the total cost of sales tax compliance, does it still make sense to open up a location in this particular state, or should you consider another? Once you identify the location, start the registration process as early as possible to allow time to configure your rate calculation and test to ensure your invoices will have proper calculation. And finally, understand how frequently you will need to file sales tax and implement a process to ensure you're able to file on time and in the correct format for that state. So I'm happy to be a resource for you in regards to nexus creating activities and product taxability. In addition to me as a resource, Avalara.com/learn provides informative videos and white papers on most anything sales and use tax related. So whether you have questions now or at a later time, don't hesitate to reach out to myself and leverage Avalara.com/learn to gain a further understanding. Thank you all for your time, and I'll turn things back over to Ivy for the Q&A.
Thank you so much, Sam. That information was very helpful. We have a question here, and it says, I'm a service provider thinking about opening a new location with a wide service area. Do I need to worry about sales tax?
In a lot of cases, you do. So states often consider providing a service a nexus creating activity, not just a physical location or new store or warehouse. So if you are providing services in areas where you're not currently registered to collect and remit, it's a good idea to reach out to a tax professional, really just to see if that is, in their minds, a nexus creating activity, as well as research the Department of Labor or Board of Equalization, depending on the state, to get a good understanding of whether or not that is nexus creating.
Great, thank you, Sam. I have another question here. It says, I'm opening a new location in the same city, not in a different state. My sales tax would stay the same in that case, right?
In most cases it should, but there are multiple zip codes and taxing jurisdictions that don't always correlate. So it would be a good idea to identify if there is a taxing jurisdictional boundary within that location that may have a different rate than others. I have run into one particular case, a customer's address for their deliveries was on the back side of a building, and the actual front office entrance had a separate address, and the sales tax rate was about 2.5% different. So it's a good idea to understand exactly what the rate is based on not just the zip code, but the actual address of that location.
Wow. Well, that's about all we have time for today. Sam, again, thank you so much for joining us today. We've got to wrap up, but everyone, please be sure to check out Manta's other webinars, which are linked in the attachments. Thank you, everyone, for joining us today, and thank you, Avalara, for sponsoring.
Thanks, Avi.